But it's FMCG that's in focus, and how has Q4 been for most companies, for the industry as a whole, and how is the consumption theme looking like going forward? We're now joined by Godrej, who's the chairman at the Godrej Group. So thanks very much for taking out the time. Let's start off with that, sir. For Q4 for the FMCG industry with regards to volumes, most of them have pretty much come in with good set of numbers. It's not been disappointing this quarter, but the point is how far can we sustain and stabilize at these volume levels?
No, I think demand for FMCG product continues to be strong. We feel even the April-June quarter will be quite strong. Consumption continues well in the country, and especially rural consumption is quite strong. And with the monsoon also forecasted to be good, we think the first couple of quarters of this financial year will continue to be strong growth for the FMCG sector.
Okay. Sir, if you could also talk a little bit more with regards to, how do you see it shaping up in this current fiscal right now with, the overall consumption theme picking up? Do you see demand holding ground that we've seen this theme playing out really well over the last few quarters?
Yeah, I think if you look at the economy as a whole, I think the year 12-13 was a very poor year in terms of growth of only about 5.5%. I think GDP growth in the current year will be higher. I expect it will be around 6.5%. That will lead to good demand in the FMCG sector too. I think the rural economy will do much better this year, because last year we had a poor monsoon. This year the monsoon is expected to be good. So overall, I expect demand to be strong. And the first 5 weeks of this financial year have been good, for example, for the growth in demand for our products.
So, this quarter as well, you had a boost coming in from the declining raw material price, which was aided margins for most companies. Would you see that as a future contributor as well to margins? Do you see prices of raw materials stabilizing around these levels?
Yes, most raw material prices have been coming down, especially vegetable oil. Vegetable oil prices are at a 3-year low. As you know, crude oil prices have also come down. I expect these decreases in prices of crude oil and vegetable oils will continue, because there is a huge surge in production of hydrocarbons in North America from shale gas, and that will lead to lower hydrocarbon prices in the future. I think that trend will continue, and vegetable oil prices do also depend to a certain extent on hydrocarbon prices, because some vegetable oil is converted into biodiesel. I think generally other agricultural crops have been good globally, and that will lead to lower food ingredient prices both internationally and in the country. So I expect that this trend of lower raw material costs in the FMCG sector to continue for some time.
So since we're talking about the consumption theme also, off late we've been talking and giving increasing importance, and we've been seeing the food article inflation that's gone up in double digits right now. What do you see that, moving towards? Do you think that can be brought under control, and the implications of that in terms of overall consumption, for the consumption theme?
Well, food inflation is now back to single digit, and government are taking a lot of steps to contain food inflation. I think there are two things in terms of food inflation. One is the global prices of many food items had led to inflation. Now they are coming down. Secondly, our supply chain issues had affected food inflation. I think they are being tackled too. So I expect food inflation in this financial year will be benign, and that will help the FMCG sector too, because a lot of the FMCG players do use certain food ingredients or other non-food substitutes like industrial vegetable oils, for example, I think the price situation will be benign.
Okay. What's it looking like with regards to the overall valuations for the sector right now? I mean, from an analyst point of view, for FMCG, it's still looking a little bit stretched at this point.
No, I don't think so at all, because I think one should look at what the long-term value creation of a sector or an industry will be. And I think FMCG sector will be a major value creator over the years. You can see the reaction of international companies, multinationals. For example, Unilever has offered a significant premium over the then price to buy Hindustan Unilever shares. Clearly, it is expected that the FMCG sector in India and other developing countries will do very well over the, say, next 3 to 5 to 10 years. And I think what Unilever has done makes eminent sense. And I think there will be tremendous value creation in the FMCG sector, whether you look at the next 3 years or 5 years or 10 years. I don't think one should be taken up too much by some historical trends, because the PE ratio depends very strongly on the growth rates of the industry. The industry is growing strongly. If the earnings growth rate is high, if raw material costs are coming down, then a strong valuation is to be expected.
So, right now, what's the scope of acquisitions like? I mean, do you think that's it's going to be big going forward? I mean, your company has been big on acquisitions abroad. You've been setting off aside a war chest to invest heavily into acquisitions and bring in more products and have a worldwide reach right now. Is that something that's going to be a differentiator for most companies? For that matter, if you have to compare domestic players to MNCs that are already operating here in the industry.
I think that's an advantage domestic players have in the Indian FMCG sector, because domestic players can look to acquisitions both in India and outside, which multinationals tend not to do, because they're already there in most geographies. They do not like to acquire brands which are not part of their core list of brands. And so Indian companies have tremendous opportunities in this regard. And if you see, Indian companies have been adding tremendous value through acquisitions outside. If you look at the compounded annual growth rate in the share price of Indian companies, it has done much better than those of multinational companies operating in India.
All right. So just one last word from you. We've got the IIP numbers that are going to be declared shortly. I mean, not today, but within this week itself. And that's going to be another point to talk about, because so far we've been seeing that, manufacturing, production, offtake, output for the industry has been a little slow. What's your own take on the situation right now?
Well, I think the industrial growth figures for 2012-13 were very low. I think it can only improve from there. Government is also taking certain steps to ensure that projects are cleared. The Cabinet Committee on Investment has cleared several projects. So I expect industrial growth rates in 13-14 will accelerate over those in 12-13. And I look to the IIP numbers with eagerness, as I'm sure you will. Yeah.
All right. Mr. Godrej, really appreciate you joining in, sir. A pleasure chatting with you this morning. That's Mr. Adi Godrej of the Godrej Group, talking about consumption, talking about what's been happening in the industry and lots more there with regards to growth. We're taking a quick break on that note. Should be right back, talk about the markets in a bit more detail on the other side.